I'll just say it was two very enterprising young men at an investment firm that had an idea to start a firm. Sounds normal so far. So they pitched us. They want us to be their anchor investor, and pretty good ideas, similar to what they were doing at their old firm, just spinning it out. So, like a normal due diligence, well, what's the contracts like with your old firm? They were still working at their old firm.
Ooh.
So,
Ooh.
so exactly that.
They really trust you. I got to say that, man. They trust you.
Well, I don't think they trusted me. They just probably didn't expect me to ask the question. It occurred to me.
Welcome to Against Consensus, a weekly podcast in collaboration with Fin News. I'm your host, Angelo Calvello, and in each 30-minute episode, I interview asset owners, asset managers, service providers, and innovators who are challenging conventional thinking to create better investment outcomes for their beneficiaries and clients. Our goal is to elevate the conversation and help you make smarter investment decisions, always with a little edginess along the way. In keeping with the mission of Against Consensus, my guest today is my friend Waymond Harris. Waymond is the Senior Vice President and Treasurer of Blue Cross Blue Shield of Michigan and the President of Bricktown Capital. Love the shirt. In his role, Waymond is responsible for managing the financial assets and debt of Blue Cross Blue Shield of Michigan, including overall leadership of investment management, cash management, and treasury operations. Before joining Blue Cross Blue Shield of Michigan in 2012, Waymond held positions in sales and trading, equity research, and asset management during a 10-year career on Wall Street. He's a former Army officer with the BS in Engineering Management from the United States Military Academy and an MBA from MIT's Sloan School of Management. Waymond is active in his community, serving as treasurer and board member of the Heat and Warmth Fund, an independent nonprofit that distributes energy and utility assistance to Michigan households. And Waymond, I got to ask, I bet this is close to your heart because if I remember correctly, you're a Flint a resident. Weren't you originally from Flint?
Born and raised in Flint. So one of the trivia questions I always get asked is, people always ask, what's a little known fact about you or surprise fact? And I always say, I'm on the cutting room floor of the movie Roger and Me. There's a scene in Roger and Me where there's a parade for UAW employees, their kids. And I was in that parade and the camera pans away from me right before.
I assume you were in it because you were either the son of a UAW member?
The son of a of a UAW member, 30-year career at GM.
Here's a little known fact for you. When I was doing my master's degree, I was a UAW member here in Chicago. My uncle was the Region 4 representative, so we've got some ties there. But let me just say, welcome to the show, man. I should have said that earlier, I guess. I got a few warm-up questions for you. You ready?
I'm ready.
Optimist or pessimist on the future of institutional investing?
That's a good question. I would have to say I am an optimist in that I believe there will always be a institutional investing business. I'm a pessimist in that I don't think we'll need as many firms or people.
All right, I'm going to give you more either-or questions here. Active or passive?
Depending on the asset class. It's dependent on the asset class. For most liquid asset classes, I would say passive.
Okay. U.S. football or FIFA football?
U.S. football. That's an easy one for me.
Did you happen to see Argentina today? Oh, my gosh. What a game. Okay. Final question. West Point or Sloan? Which shaped you more as a leader?
Oh, as a leader, that would be West Point.
Okay. See, they weren't that hard, man. Or kind of layups. All right, so let's jump into it here. You know, what always struck me was your commitment to internal management. Make that case for me. And which strategies do you typically manage internally?
I will make the case to you, as is made the case to the management of Blue Cross Blue Shield of Michigan, but that have to have a caveat, is that if you're putting yourself in the shoes of of my senior leadership of Blue Cross Blue Shield of Michigan, you would have to know that there had always been a team doing some form of fixed income management going back to the 80s at Blue Cross. So the idea of having someone managing a certain portion of your portfolio, whether it's cash or cash like, was not foreign. Once you are over that hurdle, I think it comes down to a couple of things. The first one, the large one for me, which I think it goes partially with passive management, is cost. We had proven that we had the ability to manage assets to a benchmark and achieve benchmark like returns over time. That was not a question. The question becomes, can you get alpha in those asset classes by going out to an external manager? I think you and I know you pretty well, Angelo, would say that for most liquid, long only asset classes, that alpha, if it is there, is very fleeting. So then you come down to, well, what's the cost? And we had many outside firms come in and review our structure, review the cost structure. And we were in 90% of the cases, either the cost was below market, or we were being charged, or at the very low end of market. So at that point, it became we can get you market like returns for below the cost. And then the kicker is that you get control of the assets. And I know we're going to talk about this later, but when you think about it in terms of Blue Cross Blue Shield of Michigan, specifically the way the corporation is structured, we're a nonprofit mutual. By that, we target on our health insurance business 0 to a 2% margin. And as you can imagine, with the actuarial cycle and trying to plan, there are years where you will fall below that zero. The investment portfolio is there to provide the additional income to ensure we have a profitable business to be able to serve our members. Because of that, there are times where you're going to want to target a total return, and there are times when you're going to want to target a yield, and there are times when you're going to be focused on liquidity and cash preservation. If you're allocating that out externally, because I can already hear all of the external managers getting ready to call me up, yes, they can do it, but it's much easier if you have the team there with the incentives aligned where you can quickly shift on a dime and people aren't necessarily focused on we have to get that market return for our compensation or the way the firm gets paid.
Okay, so cost is certainly one of the benefits. Are there others?
Yeah, well, I would argue. Well, my wife told me I would argue too much, but my one thing that is true is we do get the returns. I said we target a market like return, but if you were to look, particularly one of our core strategies going back is fixed income management. Our fixed income team over 3, 5, 10-year periods consistently beats the Barclays aggregate. So we do get alpha, over the long period of time. Similarly, we do manage equities more passively there, but we are right in line with the benchmark. So I think the fact that you have the cost, but you're getting the market return, you can't decouple those two. And it's what I said, the control of the assets, being able to change what the goal of the portfolio so that it's not just a pure return. It's hard to put a value on that, but if you're a CFO of an organization like an insurance company where you have that large pool of assets and being able to use it as a toggle to help as you target your cash flow and income statement is incredibly powerful.
So you've mentioned the team several times. Tell me a little bit about the team and how you're able to attract and retain talent. I mean, you're not in New York City, you're not in San Francisco or Chicago, but you've it's clear you're proud of your team. So how do you attract and retain that talent to do this internal management?
First, I have to give all credit to the organization of Blue Cross Blue Shield of Michigan. I think the culture that we have established there, it's a place that people enjoy walking in the building to work. You and I, Angela, we've talked about this, have both worked for banks where it's a great culture if you are there to enrich not only the bank and yourself, but it may not be the most congenial. Blue Cross Blue Shield of Michigan is a firm where we're focused on providing, the best healthcare coverage for our members, and that shows every day. And it provides a culture that people want to come into work because we're trying to do something good for our members. And that permeates throughout the Bricktown team and every team there. So first and foremost, I think it's a culture. You attract a type of person that's going to be aligned with that. The other thing is the fact that there are people who want to be in Michigan. A lot of people, like myself, so we mentioned born and raised in Flint. I lived in New York for 10 years, from 2002 to 2012. But when it was time to, well, the hedge fund I was at also closed, but also at that time when I was looking for a job, I had my first child, our young daughter, my wife and we were looking to move back closer to home. And to be able to continue to apply my trade, which at that point was investment management near home, I probably couldn't put a number to that. And there are several people on our team that have similar stories, whether it was moving back for family or just wanting to move back to Michigan because they like Northern Michigan in the summer, and being able to still be involved in the investment industry on an institutional basis is hugely powerful. We have to align compensation. So you're not, I would say that we're not paying like bank top dollars, but we have a system of compensation aligned for professionals in the investment industry that they can understand the results they get goes along with their pay. So you have to have the culture. You have to I think Michigan, despite what people think, is an area that there are always going to be people who want to come work here, and then you have to align compensation and incentives with your overall goal, and that's how we're able to keep the team.
How big is the team?
We have roughly 33 people. So if you look at 33 in Treasury, in Bricktown, it's just under 30 because I always count my cash management people who are Blue Cross employees, not Bricktown employees in there. But we're really split into three groups. So we have a portfolio management group that consists of portfolio managers in both fixed income. So we do investment grade fixed income and non investment grade fixed income. We also have equity portfolio manager who also his background was he used to be a derivative market maker in Chicago. So he also does listed derivatives for us as well. And then we have a team of analysts who are, uh, I guess, asset class agnostic. So they cover mostly fixed income, both investment grade and non investment grade. We also have a team of, we title it investments, but you could think of that more as our asset allocation and our team that works on non liquid investments. So we do allocate out to managers, and I think we've talked about this before too, but I hate the term hedge funds, but for lack of a better term, we invest in hedge funds, multi strategy hedge funds. We invest in private equity, private credit, any asset class where we think has a very low correlation to our equity and fixed income beta. We will try to invest or get some exposure to that asset class. Then I have a full risk team that does a lot of the modeling that we have to do for broader finance to forecast our investment grade fixed income. They also monitor all of our risk metrics. And there are something close to your heart. They're really our data analytics team as well. And then finally, I have a compliance officer.
Thank goodness everybody's got one of those. And I want to I want to come back to the team, but we've already talked about, or you've mentioned Bricktown Capital a few times. Could you just take a minute and tell me its role within the business?
Sure.
So, I mean, people may not be familiar with this because, they may just think it's Blue Cross Blue Shield of Michigan, but you keep mentioning Bricktown. So what do we got there?
That's true. And they would be correct up until the summer of 2022. So, as I mentioned earlier, Blue Cross Blue Shield of Michigan had housed within the Treasury Department portfolio managers who invested on behalf of the company for a long period of time. Around 2019, we had begun, well, before 2019, I would say Blue Cross is if Blue Cross evolved, the team would evolve. So when we saw that we needed to maybe invest in, at first they used to invest just purely in cash. Then they really invested more on an investment grade benchmark towards the ag. Then we added high yield. So we always added skill sets along the way. By 2019, the team had grown large. We were investing fully in all liquid IG. We were doing some equities. And my boss, who's now the CFO, he was the chief risk officer at the time, suggested that we have a firm come through in the compliance range and just make sure that our compliance structure is set for a team our size. We're managing $12 billion, doing a lot of liquid things in house. Let's have someone come in and validate that we have all the necessary controls and we're compliant with all the laws. In that, what they discovered, because we were establishing some joint ventures at the time in Medicare Advantage with some other Blues, was that if we were going to manage those assets, we needed to be a registered investment advisor. This goes back to the Registered Investment Advisors Act 1940. And as a result of that, we decided that we would create a subsidiary and house the investment personnel in that subsidiary. That created Bricktown Capital. So Bricktown Capital is purely the old investors from the Treasury Department of Blue Cross Blue Shield of Michigan. They're now housed in Bricktown Capital, and they invest across the Blue Cross Blue Shield of Michigan enterprise for all of our assets.
I'm going to jump back to the team for a minute. We talked about attracting and retaining talent, and you used the word culture, that you've built this culture. You have Bricktown Capital. It sounds like, that's a way to build culture within the organization. Tell me about decision making within the organization. Is it siloed, or do you have a decision making structure where there's, how would I say, a lot of give and take, a lot of, competition for capital? Is anything like that?
Yeah, so that's a good question. I almost would say you probably need to ask some of the guys who work for me that question. they may know they may know better than me, but I I think it. No, I'm not trying to waffle here. I think it's a little bit of both. And
Okay.
some of that, I benefit from the fact that as I was talking about, we have a long tenured team. So I've been at Blue Cross for 14 years now. The core members of the team have been here since then or even before then and working together. So we gel together very nicely. And I think the team and our culture of compliance, they understand, especially in portfolio management. Look, I was not a bond PM. I was probably not a great bond analyst even when I was one. So don't come asking me if the DVO1 on this particular bond is a more attractive buy than that bond, right? Like that's not what I'm trying to do. That's not really something that I should be having a decision in. But there are decisions that need to be made when you come to key critical points. And I think the team does a great job of coming to me with those decisions with what they found, what their recommendation would be, and laying out the facts. And unless it's purely necessary, I think that I try to drive more decision by consensus, unless I can. Unless there's reasons where I can't reveal. Sometimes there will be things I know that I can't reveal to everyone, or I will just have to take a hard stance because of something that I believe in. But that's very rare. One of my mentors once told me when we were establishing an organization is the key as the organization gets bigger because you can't have your eyes on everything is to make sure you have the controls set up such that you know that by the time a decision comes to you, it's passed through all these checks so you can be comfortable with your options. And that's what I try to do.
Okay. All right. Let's shift gears for a minute. Given that you're responsible for managing the financial assets and debt of Blue Cross Blue Shield of Michigan, and the and you're also responsible for the organization's cash management. I'm an outsider here. I don't really understand healthcare and insurance, but is it fair to say that capital preservation is a governing objective?
Oh, I think that's very fair. I can't remember if it's Howard Marks or Warren Buffett or both, but I think being a fiduciary, the first thing is do no harm. So you try not to you try not to lose any money first. We definitely focus on trying to make sure we don't lose money, but because I said we're a nonprofit, it ebbs and flows. There will be times when we know that we may have the ability to take a little more risk, and risk is, what do you define as risk? There are different ways that we look at it. That could be risk just in terms of I'm willing to put more in non-liquid assets. So we're not talking, may not think that I'm going to lose the capital, but I may not have access to it. So liquidity is a
Ah,
big form of risk for us, right? Or risk could be that I am willing to invest more in liquid assets, in equities, but those are marked to market on our income statement. So we still have the idea that I will see that change in unrealized flowing through to my bottom line. Is that a risk I'm willing to take? We also just have the risk, the regulators, as an insurance company like a bank, we have to maintain a certain statutory surplus. So every asset we invest in takes a charge against that surplus. So we have to be in constant talks with the business to make sure that we're not taking excess surplus on investments that could be used to drive the healthcare business. So, long-winded answer to say, yes, we focus on capital preservation, but it also depends on what's going on with the business to let us know how much we need to focus on capital preservation versus how much risk in those different buckets we can take.
yeah. And that's different than many of my other guests that are running a pension fund or an endowment. You're really focusing on business first. I think is a reasonable
Yeah,
way to
I think
say it.
that's a
Yeah.
reasonable way to say it. Yes.
Okay. All right. I was going to ask you about liquidity, but you've already talked about it, man. You jumped ahead of me on that one. So
Sorry. Well,
that's okay. Don't
liquidity is
apologize
king.
for it. Yeah, yeah, I'm sure it is. And I would imagine there are instances where you could be a provider of liquidity, given the kind of business you're running, right?
I think that would be the ultimate goal. I think that's the ultimate goal of any investor is that if you can earn outsized returns if you could be a provider of liquidity when liquidity is scarce. So I think as you think about it, if you're thinking about insurance in general, I think that applies more to life and some long tail PNC because you're you're writing those policies and the liquidity you need is not going to come due for some time. If you think about health insurance, you signed up last year, you go to the doctor today, we're paying that claim in 30 to 60 days. So the tail on what the money you've given us versus what we've paid out is not as long as with those. So for us, it really depends on the underwriting cycle, on if how our liquidity profile looks, as opposed to a life or other longer tail insurance company.
Good distinction. I know I've talked to some on the P&C side, and they talk about, and I think they use the word stability
Right.
of the premiums. And, you've kind of educated me on that. I mean, I don't know the first thing about the insurance book, but I'm learning as I sit in this chair.
I'm learning too. I try to stay at Holiday Inn Expresses when I can, so I can become an expert in this stuff.
Uh, I don't think that's the case, but I appreciate the self deprecation. All right, I'm going to shift gears on you now to the topic that is really, kind of flowing through our industry now, and that's artificial intelligence, right? I mean, it's close to my heart, but it seems everybody now has got something to say about it. I'll ask at a high level: are you using AI in your workflow and your investment decision making?
We are so, and we talked about this when we were setting this up. We are
And remember, you
definitely
told me you got a data analyst, man, so you're way ahead of everybody else. They don't even know what the hell that is.
yes. So we the whole enterprise, but Bricktown included, we have had a focus on integrating AI into our workflows over the past 2 years. I think I would
Hmm.
call it. I would say that we are still, from our conversation, very early in our innings in integrating it to our workflow. And by that, I mean, I think most people are like me is I'm using AI every day in my work, but I know that every day I learn a way that I can be more efficient or there's functionality or something that I could be doing that I'm not. So I think we're still only scratching the surface. Uh, we are we are definitely not, I guess when you say in investing decision making, I don't know if I'll ever be completely comfortable saying that we're good with the go no go decision or AI pushing the button. We are using AI or the team is using AI on the desk a lot in investment research. An example might be we invest in CMBS, looking through pools, doing analytics on pools, things like that. So there's a lot of work going on our team in AI to come up with insights that will inform our ultimate decision making. So don't know if I would say just the way you phrased the question. It's not being used specifically in the decision making process, but it's being used to inform the decision making process, which I think is where we are. We'll see in a couple of years how that changes, but I that's where we are now. For us, and a lot of things, and we are still focused. I would say AI is focused on making us more efficient. I feel my team and me, to a certain extent, spend too much time creating presentations or any other sort of documents to help us explain what we do or do presentation. And the first thing trying to do with AI is to help us automate that process, because Blue Cross Blue Shield in Michigan, we talked about it. You think about it as an enterprise, but Bricktown is only one of the subsidiaries. We have five large or four large subsidiaries that we are individual legal entities that we manage money for. We report to their boards. We provide complete investment reports, quarterly reports, monthly reports for them. And that was a very manual process before AI. And we're still early in fine tuning and updating that process. Similar for me, I have to do a lot of presentations and reports and making sure that I'm integrating the AI or using the tool to help me be more efficient. So I'm not just sitting all day answering emails or doing something like that where my time could be better used.
So what you're really talking about is right now it's, I guess I would say, operational efficiency,
Yes.
right? It's not, and it's used to inform investment decisions. The output of that efficiency, independent. I mean, you're talking about presentations. I get that. That's to the board, but it sounds like your team is using it to expedite, a kind of
Exactly.
the workflow.
The
But
work, yes.
right. But I wanted to ask, an insurance company has a lot of data, and independent of your work, I mean, just the underwriting process, it would seem, would be using some type of
Oh,
analytics. Am I right?
yes.
Yeah.
Yes. And they have a whole effort. We have a
Hmm.
whole I forget the name. We have a whole data
Yeah.
governance team that's working on integrating AI in that governance. Also, you remember we have a lot of data, but that data is very sensitive because you start talking about protected health information. So we have all the guardrails around that. But yeah, there is a lot of work on making sure that we are using that data efficiently.
Right. But now within your business, you know, putting aside the underwriting and the other units that may not be doing the same type of work you're doing, how do you supervise or manage employee adoption? Because I've heard some stories from your peers where suddenly some of the team is using a type of LLM, let's say, in the public domain, and there's a concern about data privacy with your not your um, not the information of the folks that are buying policies from you. That's incredibly sensitive data, but just in general, you've got a lot of data on the investment side. I mean, you have to, I would think, have some kind of process for the adoption of AI by your team, so they just don't go off and suddenly start using it. And I don't want to put you on the spot, man. If you don't have it, tell me. We'll
No,
take it out of this. So,
luckily, this is the part about being a part of a large organization like Blue Cross. We have a whole IT team that we piggyback on their policies. So they have a whole policy and controls around which LLMs and which models we use. So we have the preferred tool that we use at Blue Cross Blue Shield of Michigan that's rolled out to everyone's desk. Now, on the team, we do have the ability to go to IT and ask for the ability to access external LLMs, a Claude or something like that. And when we do that, we will set up our own environment within Claude. But I'll say again, for us, for our investment team, I totally get your idea that even though we're not dealing with that, the data is sensitive. We have to remember that as an insurance company in Michigan, I report my statutory financials to the state every quarter. Literally every trade is in there. So all my information is public. And if I was a hedge fund somewhere working on a black box, I understand trying to keep our ideas, but I don't think that there's much that is in there that the public wouldn't have seen that we would be doing.
If they dug it up enough. Yeah,
Yeah.
I get it. Okay. And you also mentioned, something that kind of caught my attention. Again, I've talked to a lot of your peers. They spend a lot of time on board or trustee education regarding AI. I did a presentation to Monty Tarbach's group. Monty's now running, New York BAM. And it was like he needed me to help them understand AI, kind of from the ground up. In your case, because of the nature of the enterprise, it would seem to me you've got a whole data science team somewhere. It makes you a better organization because you could write better premiums at the end of the day. And so, was there much board education?
So again, this was all credit and praise to our IT and data team. They, I would say, they were very early on. So they have been talking to the board about AI going back several years now.
Okay,
So I that whole portion of education to the board is I've never had to deal with it because our team was far ahead of it.
got it. Two more questions on AI quickly. You've got a manager that comes to you saying that they use AI in their investment decision making process, and the AI is fully autonomous. Are they out? It's a black box, fully
I would
autonomous,
never, I
man.
would. I hate to say that somebody's out purely because I've had it by me purely on the first pitch, but we're gonna have a lot. I do not like box investments because to me the way you usually get yourself in trouble is not understanding what you're investing in. Now we do have some quantitative managers that mostly in very liquid assets that we do have capital with, but we generally understand and we talk to them about the models and the inputs. We may not see the actual calculations real time, but we can understand how it's coming up with the model. If you're going to tell me that it's AI completely autonomous and that it's a black box I can't see, that
I,
that,
I, I
that
mean,
that's
that
ringing a lot of bells to me. So
I heard those bells ringing when I talked to you in 2019, maybe, man. I was a little early, but it seems like you've
Look,
softened a bit. I mean, I get
yeah, I
it.
thought. Well, I still listen to you, but it's
Yeah, yeah. You did, but here we are today. So, all right. My final AI question is what's on your wish list for AI? In thinking prospectively, what would you like to see some type of technology help you with?
oh, that's a good question.
I hope all my questions were good, man, and not just the two that you
No,
said were
there
good.
that's a but that one you stumped me. I'm probably going to waffle a little bit on this, and I'm going to liken it to the iPod. I'm going to say I can't answer it because I'm sure AI is going to come up with a fix for something I didn't know I needed. So I didn't know I needed to carry my music around with me every day until you told me I could. Right. So right now I'm happy if you help me organize my email box and my presentations, but I'm sure there'll be some functionality that in 5 years I'll be like, I can't live without it, but I never knew I needed it beforehand.
I mean, man, you're not still using an iPod, are you? I mean,
No, but that's what came. I was gonna say iPhone, but I always felt like I always wouldn't mind walking around with a mobile phone even as a kid. But
yeah,
I never thought about the fact that I wanted all my music.
yep. I got to say, Spotify changed my life on my phone. 'Cause I get to listen to anything, anytime, anywhere.
Exactly. You hear something, something to pop in your head. You're like, oh yeah, who's saying that? And you throw it in there. Hear
yep,
something
yep.
from the '80s, '90s, anytime.
Oh yeah, even earlier for me, given my age. So I appreciate that. But okay, well, I got nothing else for you. If you want me to ask you something else, tell me what I should ask you. Otherwise, I'll go to my last question. You've been generous with your time. I know you've got family stuff to take care of, so I don't want to keep you too long.
They're on their they're on their iPads. They're fine. So,
Uh, Did I miss anything? If
No,
okay, all
no,
right,
I think we had a good convo.
okay. Then I'm going to go to my last question that I ask all your peers. What's the worst pitch you ever heard? And you can't say me. You got to take me out
No,
of that, okay?
it's not you. So
Okay. Whew.
I'm not gonna. I'll give you one specific pitch, but I'll say generally, I hate anytime someone tells me in a meeting this time it's different.
Oh,
So if that's in your pitch, that's probably gonna go pretty far down there.
okay.
The worst pitch. I won't say it's the worst pitch I have ever heard, but it's the worst pitch I've gotten recently. I'll just say it was two very enterprising young men at an investment firm that had an idea to start a firm. Sounds normal so far. So they pitched us. They want us to be their anchor investor, and pretty good ideas, similar to what they were doing at their old firm, just spinning it out. So, like a normal due diligence, well, what's the contracts like with your old firm? They were still working at their old firm.
Ooh.
So,
Ooh.
so exactly.
They really trust you. I got to say that, man. They trust you.
Well, and I don't think they trusted me. They just probably didn't expect me to ask the question. Like, it occurred to me. I was like, because as we started asking the questions, I was finally like, "Did you guys leave where you were?" And they're like, "No, but so we're sure they're gonna, we have a gardening leave, but it shouldn't be." I was like, "They're not gonna let you leave to start this new firm with this IP because, of course, they're pitching deals from the old."
Oh, yeah.
So that
Yep.
that one I would say is probably that one I'll remember for a
That-
while.
That's like a rookie mistake, I got to say. I
It, wa-
mean,
it was
you
it
know,
was a rookie mistake. I
eh,
will say I took that call for a friend. So
okay, okay. I get, and you called your friend afterwards, I'm sure, right?
I did call him
I know it.
afterwards.
I know it, man. I know it. All right. Well, this is great. I appreciate it. I got nothing else for you.
Thank you for having me on, Angelo. I really appreciate it. It's good to catch up.
My pleasure. I value our friendship, and I value the conversation we had today. So thank you.
Thank you.
Thanks for listening. And be sure to subscribe to the show on the podcast app of your choice and follow us on the Against Consensus YouTube channel. You can also find episodes at the Against Consensus website, and the show's episodes will be on Fin News' website. Also, it'd be great if you could follow us on LinkedIn. All the links are in the show notes. If you have someone who belongs in this conversation, an asset owner, an asset manager, a service provider, send them my way. If you represent an organization that wants to reach the most sophisticated audience in institutional investing, then let's talk about a sponsorship. And if you're an emerging manager with a genuinely differentiated investment approach, let's talk about creating a custom episode for you that can help you build your brand. And in case you're wondering, our music is provided by the Super Trio, courtesy of the Northrop family. No AI-generated music for us. Thank you for your support, and we'll see you next time. Namaste. All opinions expressed by hosts and guests are solely their own. The information presented in this podcast is for educational and informational purposes only. The host, guests, and their affiliated organizations are not providing investment, legal, tax, or financial advice. Investment strategies discussed may not be suitable for all investors, as individual circumstances may vary.